Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. De-escalation, stock futures gain as the US and China confirm trade talks this weekend. Beijing also ramping up economic stimulus. Investors watching the Fed later today. India strikes against Pakistan, launching military strikes as tensions escalate following a deadly attack by militants last month in Kashmir. Plus, second time lucky, Friedrich Merz vows to reboot the German economy, becoming Chancellor after unprecedented initial defeat in Parliament. Good morning. So on the US-China trade war front, there are some suggestions and signs that maybe we could be facing de-escalation on that front as the two sides plan to meet for the first time, of course, since those tariffs were imposed, 145% by the Trump administration. European stocks then getting a bit of a lift, up 0.1%. It's modest, but there is that catalyst going forward after a little bit of softness for both US and European stocks, both ending in negative territory by the end of the close yesterday. Here in the UK, FTSE 100 futures currently pointing to lower. A session currently down 0.1%. S&P futures stateside also looking to gain on the back of this news. China as well coming through with some stimulus to support that economy, pointing higher on the S&P 500 now by around 0.6%. Nasdaq 100 futures looking to add 122 points. Let's flip the board and have a look cross-asset then. Treasury's relatively stable the last time I checked as we lead up, of course, to the Fed's decision later today. Just a move of 1 basis point, 430 on the benchmark US 10-year. The Fed, of course, firmly expected to hold rates currently at the range of between 425 and 450. It's the commentary, of course, from Jay Powell looking forward. The uncertainty is there, of course, for the Fed as a result of these tariffs. But is there any sign? Are they going to give any hints as to where their concern lies on inflation versus jobs that have held up, of course, stateside? Euro dollar at 113. A little bit of softness coming through on stronger dollar. A dollar that is snapping 3 straight days of losses. The euro currently down 0.2% versus the US dollar then. Brent at $62 a barrel, gaining up 0.9%, maybe on expectations that you'll get some kind of moves to close that gap on the trade front between Beijing and Washington. Gold down 1.5% on the yellow metal as that risk haven allure starts to fade in the session today. Let's get to a major geopolitical story of the moment, though, because India has conducted targeted military strikes against Pakistan, which said it shot down 5 Indian jets in retaliation. The widely expected tit-for-tat blows come after a militant attack last month in Kashmir that killed 26 people. Pakistan's defense minister explained his country's actions.
This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
OK, so you're hearing there from the Pakistani response to what has unfolded. Let's cross over right now to New Delhi and our bureau chief there, Debjit Chakraborty, joining us for the latest. Debjit, we appreciate your time. A busy day, of course, for you and the team and consequential for the region. What's been happening in the last few hours?
Thank you, Tom. Just to take you back, India struck some 9 sites, part of which are deep inside Pakistan. I mean, this is for the first time in the last 50 years that India has struck targets inside Pakistan territory. So that's quite significant. India has so far claimed that it has done its bit, and that strikes were all very targeted. Only at the militant camps across the border. Pakistan has said that, and you have heard the defense minister saying that it has brought down 5 Indian jets. There's no confirmation on that front from the Indian side. As we speak, the Indian Army is holding a press conference in New Delhi, so we are expecting to hear from that. But we haven't heard any further escalation from either side. Though Pakistan has said that if there's any further move by India, there will be a befitting kind of retaliation. But we haven't heard from India of any further strike which they are planning to launch.
Clearly, the concern is that this spirals out of control. What are you going to be watching for specifically when it comes to India's reactions and additional steps they may be taking in the next few hours, the next few days? What is your understanding of how India wants to be positioned following these strikes?
Tom, neither of the countries are in the best economic position to kind of take this into a full-scale kind of a conflict. Pakistan's economy is in troubles, and they are waiting for the IMF loans, which meets in 2 days from now to sanction the loan approval. So Pakistan definitely doesn't want to kind of jeopardize its economy further. Same with India. It is in the middle of trade talks with US and many others. The EU. Only yesterday we finalized a trade agreement with the UK. So neither of the countries are in best economic position to kind of take this conflict to longer. So I would expect that there will be restraint from both the sides. Having said that, the Indian cabinet on security is going to meet in an hour in Delhi to take stock of the situation, to formalize its kind of strategies going forward. And similarly, in Pakistan, the National Security Council is meeting today to take stock of the situation. So we'll have to wait for what comes out of those meetings. But the general sense is that the economic positions of both the countries will kind of weigh in on any further escalation.
OK, so the economic fragility of both nations could be a constraining factor. Bloomberg's Debjit Chakraborty in New Delhi with the latest. We appreciate the update as we continue, of course, to watch the lines crossing from India and Pakistan. Now, China and the US announcing high-level trade talks will happen in Switzerland later this week, led by US Treasury Secretary and China's Vice Premier. Scott Bessent has been calling the current tariffs unsustainable.
I was going to be in Switzerland to negotiate with the Swiss. Turns out the Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. And, look, we have shared interest that this isn't sustainable.
Meanwhile, US President Donald Trump says he would set tariff levels for trading partners.
We're going to sit down and we're going to put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal. And they'll either say, great, and they'll start shopping, or they'll say, not good, we're not going to do it. And I said, that's okay, you don't have to shop.
OK, for more, let's bring in Bloomberg's team leader for Greater China Economy and Government, Jenny Marsh. Jenny, talk to us about what is happening in terms of the conversations that we expect now over the weekend between the US and China. Finally, they are sitting down for official talks. What could come out of them? What are investors going to be watching for? What could both sides give up at this point?
So both sides are going into this with a sort of quite maximalist approach so far. I think this is just going to be the first round of many, many talks. I think, no one's really expecting them to come away from this with any sort of big trade deal. That being said, I think it's very unlikely that both of these teams are going to fly halfway around the world to sit down and come away with nothing. So, one possible outcome could be that they lower tariffs. And, that could be a substantially sort of like halving of them, perhaps, right back down to sort of 60%. The US has signaled that it thinks they're too high, as has China. I think, the key thing would be like how meaningful the lowering of tariffs would be, because they are so high. Even if they came down to 60%, 50%, that's still the level at which economists say would cut off trade between the two sides. But it would be a good start. I think for the Chinese side, the important thing here is they've been wanting the US to sort of make him a point person for these talks, and now it's clear that they're going to be dealing with percent and with Greer. And then, for investors, we know He Feng will be there, but also it's going to be interesting, who is on the Chinese team alongside He Feng, and this will be our first chance to get a glimpse at that. So I think really this is just the beginning of talks, but we could see tariff reductions.
OK, so we watch for those tariff levels on the back of those talks. Meanwhile, China coming through with pretty substantial support, it seems, or at least not insignificant support. The PBOC once again leading the charge with some cuts to some of their key rates. How significant is this, and how needed is it for the Chinese economy right now?
That's a good question. I think it's really interesting that they did it now because actually, first quarter growth was pretty strong at 5.4%. There have been some initial signs of pain in the factory data, but overall the economy isn't yet sort of at a real pain point from these tariffs, and yet the government's sort of been more proactive this time, and rather than waiting for the pain to really kick in, they seem to want to get ahead of it. Sort of to boost morale and show that they do have the tools to weather this trade war. I think also the timing's interesting. This all came just a couple of hours after they confirmed they would have these first trade talks at the weekend. And, the US officials have been saying, look at the factory data, the Chinese economy is hurting. This is kind of a reply to that, saying, well, look, maybe there's some pain, but we have the tools to deal with it. And it was a pretty comprehensive package. They had support for the tech industry, elderly care, startups. It seemed like a very sort of robust playbook to support the economy as they enter this sort of protracted tariff war.
OK, Bloomberg's Jenny Marsh in Hong Kong. Thank you with the latest in terms of the US-China talks expected this weekend and the additional measures being pushed through by policymakers in Beijing to support that economy. Markets welcoming, of course, the news that the US and China are set to begin those trade talks. Let's bring in Bloomberg's Valerie Teitel right now for that market reaction. To what extent can markets take this as a positive catalyst in a kind of sustained way then, Val? Talk us through how markets have been reacting to this news.
Quite positively, Tom. If you look at the reaction in S&P 500 futures, they jumped around 1.1% around these headlines. They have since cut that rally in half. We're now up just 0.6% on the S&P 500 futures. The U.S. dollar was also given a boost. Bloomberg U.S. dollar spot index trading higher by 0.3%. But, Tom, this weekend is really going to loom as a massive risk event for markets. We might see some maybe chips being taken off the table if traders decide to de-risk ahead of what's going on this weekend. But that'll be really an interest of Friday, watching the price action headed into these talks that are supposedly going to begin on Saturday in Geneva. But Asian equities are also taking this as a positive. Let's flip on and check in on those. We're seeing a boost to Hong Kong stocks. Also, mainland shares in the CSI 300 also trading higher on the day. We are seeing some weakness in the Chinese offshore yuan. But let's focus in on what's going on in Hong Kong. That Hang Seng is headed higher. There's also a bit of a tailwind for this, and that has to do with the fact that the HK Monetary Authority is currently trying to defend their peg. They're trying to defend their currency from appreciating past the peg, and that is essentially adding liquidity into the financial system. And to that note, we've actually seen the Hong Kong HIBOR, that's their interbank rate, fall the most since 2008 as the market digests this extra liquidity added into the Hong Kong market. But that is another tailwind for these Chinese assets.
And this ties in, at least to some extent, to what is going to happen with the Fed, or at least the language from Jay Powell at the presser later today. Val, what are you going to be watching for? They're expected, of course, to hold, but what do we expect Jay Powell to signal in terms of the rates path ahead? Yeah,
it's all going to be about the nuance in the press conference, Tom. What exactly is the threshold for the next cut? The statement is likely to see some changes in the second paragraph, mostly reflecting that weak first quarter GDP print, which saw the U.S. GDP see its lowest reading in a few years, dipping into contraction. But what is he going to say about the path forward? How is he going to be weighing up inflation risks versus the growth hit from tariffs that could possibly come later this year? Let's take a look at how Fed pricing is for the remainder of 2025. We're not pricing in a full cut from the Fed until July. 25 basis points priced out until July in a cumulative fashion. June has only 8 basis points priced in. I think that's going to be the tell on whether the markets read him as dovish or hawkish. So watch that June pricing. later today. I want to just end with a chart that has shown some of the recent soft survey data, the inflationary impulse that people are worried about. I thought this chart really grasped it quite well. Across the Dallas Fed, the Philly Fed, the Kansas Fed, and the Empire Fed are all seeing these rise in the prices paid components. This could be something, if Powell harps on, the markets could read it as hawkish.
OK, there's the potential constraint then for the Fed on that uptick in terms of some of the inflationary components. Bloomberg's Valerie Teitel, thank you very much indeed on what to watch from the Fed with that decision, of course, later today. We're going to have special coverage of the Fed decision later from 6:30 p.m. UK time. Before, though, here's what else to think about today. 6:30 a.m. UK time. We'll break this for you as well. Novo Nordisk, of course, the maker of those weight loss and obesity drugs. Those earnings drop at 6:30. We'll look, of course, at the demand impulse out of the US. There's some suggestions that maybe sales have been slowing in the most recent quarter. We'll see to what extent that filters through the earnings story then for that key drug maker in terms of weight loss, Wegovy and Ozempic. And in the auto space, it's BMW. Those earnings drop later as well, 6:30 a.m. We'll break those for you with a particular focus on the China market, where sales have dropped to a 5-year low. At 7 a.m. on the data side, we're going to be at German factory orders. We broke those for you as well, so a gauge in terms of the factory strength out of Germany. And on the earnings front out of the US, Arm, of course, listed stateside, headquartered in Cambridge. We will be breaking those earnings for you. Another touch point on the demand around AI chips from Arm, the designer, of course, of those semiconductors. Coming up, new German Chancellor Friedrich Merz will visit European partners as he seeks to reboot the German economy. We're going to have the latest from Berlin. Stay with us. This is Bloomberg. Friedrich Merz has sought to move past an embarrassing stumble as he eventually took power in Germany, having failed at first attempt to win the required parliamentary backing to take office. Today, the new German Chancellor makes his first trip abroad. Bloomberg's Oliver Crook joins us from Berlin. Ollie, Merz is now finally the Chancellor after something of a messy start then.
Yeah, Tom, I think it's fair to say it was a fairly inauspicious beginning for the new Chancellor of Germany, Friedrich Merz, who failed basically where no Chancellor in the modern era has failed before, which was basically getting the votes of his own coalition to support him, which was really supposed to be a procedural step yesterday and really turned into a complete fiasco where they didn't even understand what could happen next, if they could vote again the same day. Eventually, it did get over the line. And so, Tom, the sort of meaningful part of what we got yesterday was the fact that really how effective is this government going to be? Remember, Tom, this was supposed to end the era of political instability, the difficulties that we had in a three-way party coalition that brought down the government prematurely. This was supposed to usher in a new age of stability and tranquility and basically speed in getting things done by the German Chancellor. Whether or not that will be able to be possible was cast into doubt in the very first hours of this process. Merz, for his part, we heard from him yesterday giving an idea of how he would like to govern, saying that I just want to govern without pomp and without superfluous shishi. I say to colleagues who joined the federal government with me today, who were sworn in today, we must deliver now. So, Tom, you'll be relieved to know there will be no superfluous shishi from this German government. But more seriously, what they're going to be sort of concerned with and prioritizing is delivering soberly, competently, and quickly for the German population, something that the mainstream political parties within Germany have had a great deal of difficulty doing, and something that the AfD, the far right of Germany, has been exploiting for several months.
Yeah, indeed. Look, German politics is known, isn't it, for its abundance of superfluous shishi. So I'm glad that that is not on the agenda for this new Chancellor. He will, though, be meeting some of his foreign counterparts. Macron, some would say he enjoys the pomp, and Donald Tusk as well. What's going to be on the agenda in those meetings?
Yeah, so listen, there is the domestic agenda within Germany, which is very, very important. The economy that has slowed down, deploying this sort of €1 trillion worth of spending on infrastructure and defense, all this sort of thing. But for the German position and an international stage, this is going to be very, very important as well. We had Olaf Scholz previously, who was not really a chancellor, I would say, that had a great global presence. He didn't seem to enjoy the limelight as much and really sort of having the sort of German presence exerted on the global stage. Maybe Friedrich Merz will change that perception. I think where he is going in the first couple couple weeks of his administration is very telling. His first trip today is to Paris to meet with Emmanuel Macron. We know that the relationship between Olaf Scholz and Emmanuel Macron in the past had been somewhat strained. He will then go to Poland to meet with Donald Tusk, an absolutely key defense ally. After that, he will come back to Berlin to commemorate the end of the Second World War, 80th anniversary on Thursday, and then he goes straight to Brussels. He will meet Ursula von der Leyen. He will meet Mark Rutte. They will talk about European defense. And then the next week, at the end of the week, is that key EPC summit, the European Political Community. This is the biggest pan-European leader summit that exists in all of the formats. So this is a great opportunity for Friedrich Merz to get in front of all of the leaders of Europe at a moment when basically the United States has stepped back from the multilateral order. Who is going to fill that void? It is the Europeans who are still committed to it, that coalition. It's going to be the likes of Macron and maybe Friedrich Merz. And we should say that Friedrich Merz, even for a more conservative Chancellor of Germany, is really a very big believer in the European project, and that is on full display going to Brussels within a few days of becoming Chancellor of Germany.
OK, it's a packed agenda. Bloomberg's Oliver Crook in Berlin. Thank you. Coming up to the earnings story, Uber and Disney set to report today, with investors keeping an eye out for the effects of the trade war, of course, and broader consumer sentiment in the US. Our preview is next. This is Bloomberg. Uber and Disney reporting today with a focus on how trade tensions could affect what are respectively the world's largest ride-sharing service and theme park operator. Charlie Wells is here with an update. Charlie, what is the outlook then for Uber?
Yeah, well, Tom, Uber is reporting in the context of quite a ride for its share price. As you can see here, you saw a significant dip late last year on concerns about robo-taxis, but then you're actually seeing quite a recovery in the first half of this year. And this is sort of moving in kind of the opposite direction as you might think, given Uber's connection to the automotive sector. But let's bring up a helpful reason why, turning to a quote from Mandeep Singh at Bloomberg Intelligence, talking about how tariffs could actually help Uber because it helps them lock in that supply advantage that they've got if there are fewer new car owners in the United States. So that is quite an interesting take and might help explain a little bit of why we've seen such positive momentum for that Uber stock as they report today. But there's another part to this story, and it has to do with robo-taxis. So late last year, there was concern that, say, Tesla might eat into the lunch of Uber given their advantages in robo-taxis. That narrative is starting to shift as we see Uber, even in just recent days, announce new partnerships across the globe with a lot of these robo-taxi companies. So that could be giving them some positive momentum as they report today. OK, so from robo-taxis to the entertainment giant that is Disney, what are investors going to be scrutinizing when it comes to Disney's numbers? Well, we've got to talk about Disney's share price relative to its competitors in that entertainment space as well. It is seen as relatively hit more than its competitors because of its exposure to trade and tariffs. If you want to think about the number to focus on today, it is $8.8 billion. That is the revenue expected from that experiences unit that includes the theme parks that Disney is famous for. And look, this is a segment that could come under significant issue with trade tensions in the air. The other area to focus on is streaming, of course. This is an area where Disney has really staked its future. We could see a slight slowdown there, but Disney executives have said that they have pricing pressure, they have pricing power there. So let's listen for commentary when they report in just a few hours. Bloomberg's Charlie Wells, thank you very much indeed on what to look for with Uber and Disney. Meanwhile, the UK and US are in discussions about an economic agreement that would reduce the impact of some tariffs. Sources tell Bloomberg a team of British officials are in Washington to negotiate terms this week. Meanwhile, the UK has announced a major new trade deal with India as it seeks to deepen economic ties with other nations. The deal slashes tariffs on cosmetics, vehicles, alcoholic beverages and other goods. The UK says it expects the agreement to eventually boost bilateral trade by more than $33 billion a year. Coming up, we're going to bring you breaking first quarter earnings from German defense firm Hensoldt and a conversation with the CEO, Oliver Dörre. That is next. This is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. De-escalation, stock futures gain as the US and China confirm trade talks this weekend. Beijing also ramps up economic stimulus. Investors watch the Fed later today. India launches military strikes against Pakistan as tensions ramp up following a deadly attack by militants last month in Kashmir. Plus, second time lucky, Friedrich Merz vows to reboot the German economy, becoming Chancellor after an unprecedented initial defeat in Parliament. To earnings right now, BMW, the German automaker in focus, particularly scrutinised over its sales in China. First quarter for the BMW group. Earnings coming in terms of the margin story, it is in fact a beat versus estimates. 6.9% is the margin for the first quarter for BMW. The estimates had been for 6.5%. But in terms of sales, the number is a miss in the first quarter. 33.7 billion euros of sales. The estimates had been for 35 billion. They still see full year margins of between 5 to 7%. That's the range they're targeting full year on margins. The estimates had been for around 5.2%. In terms of first quarter earnings, it is a beat. So the margin is beating, the earnings are beating, the sales are softer. Earnings coming in at 3.14 billion in the first quarter, euros. The estimates had been for 2.82. It is the quarters ahead, though, and what they have to say about the tariff impact and the slowdown in sales in China that will be equally consequential for investors. Those are the lines from BMW. Switching focus to the drug space, particularly around obesity and Wegovy and Ozempic. Novo coming through with full-year sales. This is a view. Full-year sales they see at a constant FX rate of up 13 to 21%. The estimates had been for an increase of 18.6%. So at the top end of that range, Novo are guiding for higher sales in the full year than the estimates at the top end of that range. The bottom end of that range, though, 13%. Is, of course, below the estimates. Top end, you're looking at potentially an increase of 21%. First quarter Wegovy sales coming in below the estimates for Novo at 17.36 billion Danish kroner. That is below the estimates. Full year operating profit. This is the forecast. They see an increase of between 16 to 24% in terms of operating profit. And again, I've given you the sales number, upside potentially up to an increase of 21%. Gross margins coming in a little softer in the first quarter, and pre-tax profits, though, in the first quarter, a modest beat. In terms of the sales number, that is a redhead for Novo in the first quarter. Wegovy sales coming in slightly softer, missing the estimates. The Pulse will be speaking to the CFO of Novo Nordisk just after 9 a.m. UK time. The stock is up about 15% year to date. Let's get to the broader market story then, of course, as we hear that the US and China will be starting those talks this weekend. That is giving some relief to the markets. European futures pointing to gains of 0.1% after modest losses yesterday. FTSE 100 futures currently flat, 8,591. S&P futures looking to build some momentum then on the US-China trade story, up 0.6% after the losses of yesterday. Nasdaq 100 futures looking to add 125 points. Let's flip the board and have a look cross-asset. Treasuries and focus as we lead up, of course, to the Fed decision. No rate cut expected, not fully priced, in fact, until July. But what we hear from Jay Powell will be important. 4.31 right now on the benchmark 10-year, euro dollar at 1.13, down 0.1%. Brent at $62 a barrel, and gold falling 1.3%. More earnings breaking this morning from German defence firm Hensoldt, a crucial sector, of course. Bloomberg's Oliver Crook is in Berlin with more. Ollie.
Yeah, so listen, Tom, we're just looking at the numbers that are crossing the wire as we speak. We got these sort of order backlogs, so this is key for a lot of these defense businesses. And a reminder, Hensoldt makes all the sort of sensors and radars, the eyes and ears, really, of the battlefield, works across a lot of different other businesses. Their order backlog was another record of about 7 billion euros. That's an increase of about 18% year on year. They've increased their long-term revenue guidance. They were aiming for about 5 billion euros by 2030. That is up to 6 billion. We see that their margin has stepped down, however, significantly from a year ago, from about 10% down to about 7.5%. But we should say that is a beat from what analysts were estimating at about 6.4%. We should say that they've also recently announced a strategic partnership with a hardware company, a drone company. So these are going to kind of be looking at the future of this business going forward. So we're very pleased to be joined now by the CEO of Hensoldt, Oliver Dörre, to talk about all of these sorts of things. So there, Oliver, we went through the numbers. Thanks so much for joining us from Munich. Can you talk to us a little bit, put a little bit of texture behind those numbers, what we saw in the first quarter, and tell us what we can expect for the rest of the year?
Well, first of all, thanks for having me. And indeed, the numbers that we have released today clearly underline that we remain course for growth. Looking at the order backlog that you've just mentioned shows that the orders are coming in, 700 million already this year. I think EBIT revenues is pretty much in line with our seasonal profile, which is more or less with, for all defense firm, year-end loaded. And yes, indeed, now we have to see how the German government picks up pace. I think with Pistorius being the defense minister, I see some continuity. I see priorities on defense. And as orders are turning in, we have to do the math, but definitely growth ahead.
Well, listen, so since you bring up the new government and that sort of obviously that $1 trillion worth of spending that they're hoping to do across defense and the infrastructure business, when does the political promise show itself on the P&L? What is the timeline in your mind?
Well, as you see, we have updated our long-term guidance because I think it's too early, too premature to look at 2025. Probably if we look at the clear plan that the government in Germany has, I mean, we have the precedent-setting decision of exempting everything which is above 1% of the GDP in defense spending from the debt brake. I mean, that's a strong signal, no ceiling, flexibility, long-term investments. Now we have a security and defense industry strategy, which is clearly looking at sovereign capabilities. The discussion on the capability requirements has started. We're in this with the government. I think the NATO summit in The Hague will give additional speed, will catalyze that discussion. And then the focus for the government is now to build the budget of 25-26. That is, of course, the burden. We expect that to happen after the summer break. And that kind of opens the path for those orders floating in, which I would assume on additional more of the same orders already late 25, early 26. But the majority of new capabilities is rather end of 26, beginning of 27.
Got you. And then when you saw what we saw yesterday in the sort of early hours for the Friedrich Merz for reaching sort of the stumbling blocks, does it give you any sort of concern that actually this was supposed to end the period of political instability and of sort of blockades politically, that potentially things could move a little bit more slowly and actually that capital, that money by the government being spent could actually arrive a lot slower? Well, I think worst case is that really the authority of Friedrich Merz has taken some damage from this thriller that we experienced yesterday in the German parliament. I would rather go with the best case, that there were some disappointed parliamentarians who wanted to give Merz something to think about. I mean, one thing is very clear, and Merz underlined that in the German news yesterday evening, first priority is defense. He underlined that there's a real threat out there for Germany. So despite economy, migration, social topics that, of course, are on the agenda of that government, he insisted again that the first priority is defense. That's why I'm pretty sure that this will be a focus. And again, Pistorius, that is a clear sign of continuity for the defense agenda. And with that, I'm pretty confident that we will walk the talk as we go forward. And I'd also like to get your sort of how, this question of tariffs, this has obviously been the sort of big macro driver across the economy. So obviously impacts not just the sort of hardware, but also global demand. How do you see tariffs affecting Hensoldt? How do you secure your supply chains? All of these sorts of things. I'd like to understand how it trickles through your business and how much, to what degree it really concerns you.
Well, Oliver, it is, of course, a topic of attention as this is around the media, and we're looking at that. However, two things help me to stay confident in that matter. First thing is that clearly with our North Star vision, we have outlined that 50%, probably even more, which what is happening in Germany at the moment, will be business from Germany. The next 30% is Europe. And then we go for 20% internationally, where, of course, U.S. business is part of that. So in that case, tariffs, looking at the majority of our business, will not impact this business. The second thing is clearly we looked at the U.S. business. We have, of course, also very strong relations with U.S. companies bringing business to Germany. And that also makes me confident that in some way we'll find a solution of dealing with those tariffs. I think it's hotter cooked than we will actually eat it.
Okay, great. Well, Oliver Dörre, thank you very much for your perspective on all of those topics, including your earnings. I'd like to next time talk to you more about your partnerships in hardware, but we will have sort of run out of time today. So thank you very much from Munich, Oliver Dörre. And with that, Tom, I will hand it back to you in London.
Okay, Bloomberg's Oliver Crook in Berlin. We're going to stay on the earnings story in the next couple of minutes. A different sector. We're going to focus on Dutch-Belgian supermarket chain Ahold Delhaize reporting first quarter results amid, of course, that tariff turmoil. We're going to have the latest and speak to that company's CEO. That's coming up. This is Bloomberg. Welcome back. The top lines from Novo Nordisk, of course, the maker of Ozempic and Wegovy. They saw sales that came in below the estimates of Wegovy, and they have moderated their forecast as well for 2025. Let's get the details and bring in Bloomberg's Copenhagen bureau chief, Sarah Sjolin. Sarah, what are the key takeaways from these results then for you?
Well, as you just mentioned, Tom, one of the key takeaways is that Wegovy sales were weaker than expected. And this is something that investors have really been looking to because prescriptions have been falling in the first quarter. So everyone was hoping to get some clarity where we're going. And now we're seeing that they missed analyst estimates and also that they had to trim the full year earnings outlook. So by the look of it, it's not looking like the strongest report Novo Nordisk ever had. Well, the numbers were great if you look at it, just absolutely. They did make a lot of money. It was just not as good as expected.
OK, in terms of the US demand for Wegovy and Ozempic, do we have clarity on how that is evolving?
Well, we do know that during the first quarter, their biggest rival, Eli Lilly, they took over and became the main supplier for the obesity market in the U.S. Novo Nordisk last week did really try to amp up the price war and get more of the U.S. market by agreeing to a deal with CVS Health, where they will become the preferred supplier of any of these GLP-1 obesity treatments. So this is really Novo Nordisk, one of their attempts to get more of the U.S. market. And what we know is that they did offer some undisclosed price concessions to get that win from CVS. So they're really trying to get in on that market.
OK, excellent breakdown of those Novo Nordisk results for us. Sarah Sjolin, thank you. Joining us, of course, on the Novo numbers and what it means around the demand out of the US for Wegovy and Ozempic. We're going to get some more earnings breaking for you in the next couple of minutes, but within the supermarket space in terms of Ahold Delhaize. That company, by the way, has seen its stock up about 19% year to date. It has a big presence in the US. That's its majority market, of course. In terms of the first quarter adjusted operating margin, it is a miss on estimates for Ahold Delhaize in the first quarter. Operating margins coming in at 3.8%, so just below the estimates at 3.83%. In terms of the US adjusted margin, that's slightly stronger than the estimates. First quarter comparative sales increasing 3.3%. Let's bring in the CEO of that retailer right now, Frans Muller, for response and reaction to the numbers. Frans, talk us through what stands out to you for these numbers and how it positions the business going forward in a challenged environment.
Yes, very good morning, Tom. Happy to share a little bit more about Ahold Delhaize, not always an easy name. We came in with sales and margins above consensus, by the way, with a strong start of our Growing Together 4 years period, where we would like to grow our business with at least 4% over the coming 4 years. And this quarter came in with a 5% growth on sales, with comparable of 3.3%. But also our online sales, both in the US and Europe, is super strong with more than double-digit numbers. And the profitability, as you mentioned correctly, 3.8%. And that is also in line with our expectations, with a 4.4% EBIT margin in the US and then 3.4% in Europe. And I think we can be very happy with a strong start of our strategy period, but also a very strong start of the first quarter, especially in growth. And what we try to do here is to support our customers with better offers, price investments, and strong private label offer to make sure that people can deal with the challenges in their budgets.
Yeah, well, I want to get to your views on how the US consumer is adjusting. But in the first few weeks then of the current quarter, what are you seeing in terms of the tariff impact on the business?
Yeah, also we had a strong start of the second quarter as well. Tariffs are a thing which is concerning for everybody. We are in the food business. We're not in general merchandise or discretionary items, so very much in the food business. The food business is very domestic, a very domestic business. So we source both in Europe and the US very locally. The other thing, of course, it comes with uncertainty, and it comes therefore also with uncertainty for customers, households, and communities. And that's why it's so important now to support those communities with price investments, good offers, and a good shopping experience. And those products which are imported to the US, food products imported to the US, will be in the end also a level playing field for all the grocery players in the US.
Consumer confidence in the US almost at a 5-year low, and the tariff story is part of that, isn't it, in terms of the impact? What are you seeing in terms of how consumers in the US are adjusting? What behaviour changes are you seeing? Are they buying less? Are they moving to your own labels away from some of the more expensive labels? How is the consumer behaviour changing?
Yeah, that's a great question, of course. And tariffs and economic developments bring uncertainty with consumers, households, and communities, as I mentioned. And people look for more value, and that's why our price investments we made since the second quarter of last year is already now really bringing our growth levels. People see that we invest in our prices, that the offers get better, that we're more on promotion, that we have a stronger private brand offer as well in our US and in our European stores, by the way. And people also see that our online offers are very strong. We grew in the US e-commerce online with 17.9%, which is a very high number. And that's also partly also driven by our food online sales, but also by our pharmacy sales as well.
You're seeing a margin of around 4% for the full year. How sustainable is that? Are you going to? What does that mean for pricing? Are you going to have to cut prices to kind of continue to pull those consumers in the US, given that challenge backdrop, or are you going to have to put prices up, given the impact of tariffs? What is pricing looking like, and are you prepared to sacrifice some of that margin?
Yeah, we have a growth strategy, as I mentioned before, with an average 4% margin over the coming 4 years. And that means also that we have already started price investing in brands in the US. And we see now that that is coming to fruition. We have a stable to growing market share in the US. And we see that also with a 5% growth in the first quarter is an important number also for our total company. So you see that customers are responding. They feel, they find ourselves again more and more in our stores. Private brand, price investments, the total offer, but also the level of execution is picking up. And I think we are in grocery business, we are in food, so that is a rather robust business also in times of uncertainty.
What is your appetite for M&A? You've made that big deal, of course, in Romania, Profi, which is a chain in that country. How is that integration process going? And are you looking for additional targets, Frans?
Yep. So we're very happy with the start of Profi. Profi came to our business in the first quarter of this year. It's a 3 billion business with 1,700 stores, brings us to the number 2 position in Romania as a country. So very happy with the collaboration between the teams, very happy with the first integration measures. So quite confident that this will be a good year for us, 2025. And also Romania, not only Romania, also Profi will contribute to the profitability as from 2026 as well. We also reconfirmed for this year the guidance for the group with an around 4% margin, as you just mentioned, a mid to high single-digit EPS, and gross capex. We keep investing 2.7 billion for the year, and a free cash flow of 2.2 billion. So also the guidance for this year we reconfirmed, and again, as I said, very happy with the Profi acquisition.
OK, Frans Muller, CEO of Ahold Delhaize, thank you very much indeed for your time on that update with the margin story out of the US coming in above estimates for that retailer. To the drug space right now, Novo Nordisk, we broke those earnings for you, called lower on Tradegate by about 5%, 5.3% lower is the call on Tradegate. This after the maker of Wegovy and Ozempic, of course, the obesity and weight loss drugs, forecasts slightly softer growth on the back of the competition it's facing. And Eli Lilly is certainly part of that competitive challenge for Novo Nordisk. So a continued focus, of course, on Novo as we lead up to the Open. That will be a stock for you to watch at 8 a.m. UK time. There's plenty more coming up. Stay with us. This is Bloomberg.
I do think it causes a slowing in GDP growth, causes a slowing in employment. But again, I tie back to the duration of this. If a lot of this can get resolved more quickly, then the slowdown can be much shallower. The longer it goes on, the more risk.
We try to stay above the politics and just think about where the markets are going and how it affects capital flows in our business.
There's unique opportunities as well. So investors are looking at how do I reposition geographically some of my assets to take advantage of Japan, India, Southeast Asia, other countries in the world that are ripe for more growth in the near future.
The reprieve that we need right now is clarity. That's what companies want. We have some of the best companies in the world, obviously in America. They can do hard things, but they need to know what the parameters are in which they're working.
Some big names, of course, in US investing, speaking on day 2 of the Milken Conference in Beverly Hills, talking about the uncertainty, of course, that had been underscored by the tariff regime. And certainly that's what we've been hearing from Fed officials, that uncertainty, the lack of clarity, and the fact that they're relatively comfortable with rates currently positioned, given their dual mandate around inflation and jobs. That's why you expect no cut from the Fed later today. But what we hear from Jay Powell, of course, in terms of steering for the next few meetings, with markets now not fully priced until July for the next cut for this Federal Reserve. So it will be what we hear from Jay Powell that will be of importance. The rate is currently at 4.25 to 4.50. Is expected by all economists to remain at that later today. But again, how he steers going forward. Let's flip the board and have a look at another central bank. This is the PBOC over in China, coming through some action then to support that economy. Interestingly, just before, of course, the US and China sit down for those first round of trade talks, they've cut the benchmark rate. They've also cut the reserve requirement ratio for banks. That's going to add about $139 billion of liquidity into the system, also supporting the tech sector and consumers as well. So some significant moves coming through from the PBOC and other officials. It's not the big bazooka, but it is another move forward to support that economy amid those trade tensions. Now, the Pulse is going to be speaking to the CFO of Novo Nordisk just after 9 a.m. UK time. This after the stock is called lower, of course, on Tradegate on the back of a softer guidance for the full year and slightly softer sales around its weight loss and obesity drugs in the US. So stay tuned for that interview. The opening trade, though, is up next. This is Bloomberg.